You've been calculating your retirement wrong your whole life. That may sound harsh, but let me explain. For decades, financial experts and retirees alike have relied on something called the 4% rule. The idea is simple. You save up a big nest egg, and once you retire, you safely withdraw 4% each year. In theory, this keeps your money lasting throughout retirement. Sounds great, right? But here's the problem. The world has changed. What worked in the 1990s no longer matches the reality of 2025. People are living longer. Healthcare costs are exploding. Inflation eats away at savings every single year. And let's not forget taxes, which are anything but predictable. If you're planning your future based on outdated assumptions, you could run out of money years earlier than expected. In this video, I'll show you why the old approach no longer works, what hidden risks you might be missing, and most importantly, how AI can help you stress test your retirement plan so you don't end up broke in your golden years. Let's start with the old way, the 4% rule itself. This rule became popular after a financial planner, Bill Bengen, studied historical market returns in the early 1990s. He concluded that if you invested in a balanced portfolio of stocks and bonds and withdrew 4% of your starting balance each year, adjusted for inflation, your money should last 30 years. For example, if you retired with $1 million, you could safely take out $40,000 in the first year, then increase that number with inflation each year after. It gave people confidence, a simple formula they could use to plan their retirement. But here's the catch. Those calculations assumed life expectancy around 75 to 80, modest inflation, and steady market performance. Fast forward to today, and none of those assumptions hold true anymore. Retirees now live into their 90s or beyond. Markets are more volatile. Inflation in the last few years has been running at double, even triple the long-term average. And interest rates, which used to provide safe income for retirees, are no longer reliable. So if you're still relying on the 4% rule today, you may be planning with a false sense of security. Here's the reality check. Modern retirement is riskier than ever. Let's break this down. First, longevity risk. Many people now live well into their 90s, and some past 100. That means a retirement period of not 20 or 30 years, but possibly 40 years or more. Second, healthcare. Medical advances are fantastic, but they come with a cost. Out-of-pocket healthcare expenses in retirement can run into hundreds of thousands of dollars. Third, inflation. Just think about grocery bills today compared to 5 years ago. If inflation averages just 3% a year, your expenses double in about 24 years. At 6%, they double in just 12. Fourth, market volatility. The past decade has shown us that even diversified portfolios can suffer heavy losses during downturns. Now combine all of these risks together, and the old 4% rule starts to look dangerously optimistic. If you planned on retiring at 65 with $1 million, expecting $40,000 a year for life, you might be setting yourself up for disappointment. You could run out of money at 75 or 80, right when you need financial security the most. This is where AI comes in to rescue your retirement plan. Unlike old rules of thumb, AI can analyze thousands of possible scenarios in seconds. It can stress test your portfolio against inflation spikes, market crashes, and even different lifespans. Imagine asking, what happens if I live to 95? What if inflation runs at 5% instead of 2%? What if the market drops 30% right after I retire? AI can instantly show you the outcomes and how your money holds up. it doesn't rely on outdated averages. It uses real-time data, predictive analytics, and machine learning to create personalized forecasts. At AI Wealth Curve, our tools let you plug in your income, savings, and goals. Then run those stress tests. Instead of blindly following the 4% rule, you see exactly how resilient your plan is under different conditions. Even better, AI can suggest adjustments. Maybe you need to save a little more, delay retirement by a couple of years, or shift your portfolio into more inflation-protected assets. These are smart, data-driven tweaks that make your plan stronger without leaving it to chance. In short, AI gives you clarity, control, and confidence in your financial future. Don't gamble with your retirement. The old 4% rule was a good starting point 30 years ago, but today it could leave you broke. Instead, use the power of AI to design a retirement plan that actually fits the modern world. With AI Wealth Curve, you can run the numbers, test every scenario, and see how your future holds up before you make life-changing decisions. Imagine retiring with peace of mind, knowing your money will last as long as you do, no matter what the markets, inflation, or taxes throw at you. That's the future of retirement planning. Not rules of thumb, but personalized insights powered by AI. Visit AIWealthCurve.com to get started today. Take control of your wealth, protect your future, and make your golden years truly golden.